Yes. Welcome everyone. Good evening, and let's get started. I think there are still some more starting, and by the time they join, we will be already starting our webinar. So, to those who do not know me, I have been with Prabhudas Leeladhar, heading the technical desk. With Prabhudas Leeladhar, I have been for over 16 years now, and I am heading the department for the past 7 to 8 years. So, this is the technical chapter today, what we are going to study. And it's going to be very, very interesting. It's going to be quite interactive. And everyone, the fact is that everyone wants to be a part of stock market because that wherever you go, it is always a hot topic. What to buy, where to buy, why to buy. And most of the times people are buying only on hearsay. Sometimes these things do go wrong. And believe me, actually, when I had also joined, I also did not know how important technical analysis was. For me, it was really Latin. I did not understand anything. And now that you all know that I have been here for the past 16 years, it required a lot of discipline, a lot of consistency, and of course, the rules. So most of you would be interested in trading on an intraday basis. So for that, of course, a smaller time frame needs to be watched. Some might be interested in positional, like for example, a swing trade or maybe for a longer period. So the rules of technical analysis are the same. So that the beauty of it is the rules are the same. There is nothing much. It is not a rocket science. It is not so difficult to understand. But yes, your commitment is required. Your discipline is required. And one has to follow the rules. So today, I believe most of you are new to technical analysis. So it will be an introductory lecture on candlesticks. So as we all know that market never moves in one straight line, or it never moves in one, it falls down in a straight line. Now there are three trends normally what a market observes. Either it is a bullish trend, that is an upward move, or it is a bearish trend, that is a downward move, and otherwise it is consolidating or in a sideways move. That means, there is not clarity, there is no clarity in the trend. So I will be showing you just to start with that why do we need technical analysis. So I hope everything is now what I think is that market never moves in a line. A market doesn't fall like this. Normally, it is always going in a swing. It may retrace to a bit. Again, a new rally comes. Again, the investment. Again, we see. So this is how normally the movement of a chart takes place. Am I okay with the voice? Is everybody voice clarity, everything okay? Okay, I think so. This is what I mean. And similarly, market sometimes it consolidates. What do we mean consolidation? Well, see, question, and I think someone is raising hand, but let me talk to you all once I finish my lecture, or maybe in between when I'm asking you, because this will only be disturbing me when randomly if people raise hands. Give me some time. We have all the time. I will be there to your questions, but let me first right now give the introductory so this lecture becomes interesting. So I hope there is no voice issue. Everyone can hear me. Everyone can see the screen. That is what is important. Yes. So now when I said that when the market is moving in an upward move, it is always like this. When I say market is in a sideways move, it means it is just, there is no clarity. We are seeing that, yes, this is how the market is moving. So this is what we call as sideways. And when it's falling, well, the fall is very easy. Believe me, when the market gets in the bearish move, and if you are following as a trader, your returns of profit will be much quicker because it takes months to reach the peak. But when it falls, the fall is normally sharper and some little bit of a bounce. Again, it may fall. So the fall is much quicker compared to the rise. So this is how, what I wanted to show you, that market moves always in whipsaws. It is never, never, never a clear cut one-way rally. And that is where this study really helps us. The difference between fundamentals and the technicals, which I always tell, is fundamentals tell you what to buy. But what to buy, what is most important is when to buy. So technical is all about support, resistance, breakout, breakdown. So this is what the language which we will be using eventually. Now today, the lecture begins with introduction on candlestick. So now I shall close my video and now we shall go start with our slide projection. Yes. मेरा वीडियो बंद कर दो. Stop my video. I don't want my photos because it will only block the slide. Yes. So now let's get started to candlestick. Now, first and foremost, there are many types of charts what people observe. It could be a line chart. It could be a bar chart, but most commonly used is the candlestick chart. Candlestick chart is used, it is a very, very age-old invention from the Japanese, and it was used by the rice traders. And the beauty of the candlestick, I will give you the comparison, is one is line chart. What happens in a line chart is that you only get the closing. You do not know what happens on each day. That is the opening, the high, the low, the close. Also, even in a bar chart, we get everything. The opening, the high made during that period, the low made during that period, the close made that during that period. But the beauty of candlestick, it is very eye appealing. Once you see the candlestick chart, it is self-explanatory. So that is the beauty, and hence we are starting with candlestick. Now, this candlestick, study of candlestick, it is not going to help you to create trading strategies, but it definitely helps you. And believe me, see, nothing is 100%. Before I start this, one must know that nothing is 100%. This is basically a study on the past data. Technical analysis is always a study on the past data, that is on the history. And the future price projections come from your past movement. So this is all about projections, about forecasting the future movement. So nothing is 100%, but yes, we try through our studies, through the understanding of charts, through the use of indicators, we only try to evaluate in a better way, whereby we can make an entry at a very right time, whereby your risk to reward ratio. What do you mean by a risk to reward ratio is, when you are a trader, the first and foremost thing what one is supposed to know is, when you are entering at a price, there has to be an explanation as to why you are entering at that very price. And once you make that decision that yes, you want to enter this stock, the first and foremost thing, before knowing the target, you have to make it very clear to yourself, are you a trader? Are you an investor? And how much money are you ready to lose? Can you afford to lose? And what is the gain in comparison to the loss that you are likely to make? So that is what we mean by risk reward ratio? So risk reward ratio at least has to be 1:2. So for assuming if you are buying one stock for 2 rupees gain, your risk has to be a loss of 1 rupee. It cannot be 1:1. Then only it becomes a favorable trade. So now let us start with our candlestick. Now this is our introduction to the candlestick. So this first slide, what I am showing to you is now let's go very patiently. We have all the time. This is going to be a lecture going on for 2 days. So please try to understand and let's make this very interesting. So you as a beginner also, once you would want to make your own trading strategies, it will be fun because you are knowing what you are doing. So this is the idea behind this webinar. So now let's get started. The first candle that I am showing you through my cursor is a bullish candle. What do you mean by a bullish candle? When you see a candle on the chart, which is with either it is bullish candles are shown either in white or in blue or green. And the bearish candles are shown either in black or red. Okay, so that is one common thing which one has to understand. The colors for bullish are either white, green or blue. And the color for bearish is black or red. Okay, so now when we say bullish means what? It has made a high during that period. It could be a daily candlestick. It could be an intraday candlestick. It could be an hourly candlestick. It could be a weekly candlestick. So what does it mean? The stock has opened at a low. It may make a new low, but during that period, let's talk now for easy reference. It is a daily candlestick, a chart with a daily candlestick. Okay, because in my examples, in our case studies also, we will be referring to our daily charts. So we will be referring for a common platform as on a day-to-day basis. So if on that particular day, now let us see the white candle. I told you in the beginning that white candle means bullish. So let's see, as per the arrow shown, we are opening at a particular point. During that period, it does make a low. However, during the day, it rises to make a high, but it closes close to the high. So this is what we mean by a bullish candle. Yes, someone is asking me, someone has raised a question. Let me see what it is. Okay, there are questions, no questions. Okay, fine. Now we go to the bearish candle. So I hope I have made myself clear with the bullish candle. Now on a particular day, like for example, today, we have seen, if you are observing the market, today we have seen most of the charts showing red candles. Why? Because we saw good profit booking coming in. Yesterday, Nifty made a high of 17,950. Today, we have closed at 17,750 levels. So now when it is a black candle or a red candle, what does it mean? That means it is a bearish day. So the stock opened high. It made perhaps during the day, beginning of the day, it made a higher level. But at the latter part of the day, on the closing, it could not sustain on the high. It has made a low and probably a lower low, but closed at a low which is next to the lowest low. So this is what we by a bearish candle. So that is one thing which one has to understand in candlestick. Not at all difficult. Once you start seeing the charts, you will understand as to what I'm saying. We started. You're muted. Now we will start with the bullish candle. Like I told you that the bullish candle is always shown in a green color, white color, or a blue color. So if you are bullish, this is a repetition with the explanation given to you on this slide. And of course, we will be sharing this for your reference, but just as a repetition, if you look at a Japanese candlestick and you see a bullish bar, all you need to know is that the open is at the bottom. So like how I explained to you, that once you see the opening of a stock, it perhaps makes a low. So this is the green part which I'm showing is the body of the candlestick, and the two sticks shown as the two extreme are called the wicks. So it is resembling a candle with the wick. That is why they are called wicks and the candles. Okay, so this is the green bullish candle. And so the explanation is when the price moves up higher and eventually closes at the top, we mean it is a bullish candle. Below the open is the lowest point referring a particular point in time. What do I mean by a particular point in time? This means that the high and low is determined by the type of the candle that you are looking at. So when it is green, you have to understand the stock has made a high. So the open and the low will be at the bottom, whereas the high and the close will be on the higher side. So this is what we mean by a bullish candle. Now, we will be taking some examples of the bullish candles. Normally after a big long rally, what you see is a reversal. Those are all called bearish candles. But when the market has fallen substantially, which we have just witnessed some time back, when Nifty made a low of 15,200 levels, we saw some occurrences in the candle patterns, which were giving us a hint that yes, we are now heading for a reversal. We shall come to that gradually. So there are a few examples, the most prominent examples of bullish candle formation. First, we will be starting with that. Then we will follow it with bearish candles. Okay. So the first one is the hammer. Look at the picture on both sides. It could be a red color. It could be a green color. So now since we are talking about bullish candles, think logically, where will this come? At the end of a bear run, when the market is showing signs of bottoming out. So this is what a hammer is. Now I shall explain to you what does it mean. First, let's see the theoretical part. Hammer is a single candlestick pattern that is formed at the end of a downtrend and signals a bullish reversal. So that means when there is at least, now just for a common understanding, whether it is a swing trade or whether it is a longer positional trade, there has to be at least 15 candles prior to the occurrence of a hammer or any reversal pattern. So when there is at least a count of 15 prior candles which have consistently shown downward movement, and then it is followed by a reversal pattern, in this case we are talking about hammer. So what happens is, what does hammer signify? So after a good bearish move, the stock makes a low on that particular day. That means the bears are in total control. But during the latter part of the day, the last few minutes, say half an hour or 40 minutes or 1 hour, the last remaining 1 hour of the day, there are bulls who are taking part in the particular stock and trying to lift the price up by its participation from the low made to close towards the high. So you understand this very, very properly. The color can be red or green, doesn't matter. But prior to that, there has to be a continuous fall, at least 15 candles. That will give a definition of a previous bear run. Okay, so at least, mind you, because few candles does not depict whether it is a bear run or a bull run, it has to be at least 15 candles to give some weightage to these reversal patterns. So this candlestick chart pattern has no or little upper shadow. As you can see, we discussed that normally a normal candle has a strong, healthy body with wicks on the either side showing the highs and the lows of that day. Whereas the end of the wick or the body is called the open or the close. Okay, so the real body of this candle is small, as you can see on top over here, and which should be more than the wick, the shadow has to be more than twice the real body. So as you can see, it looks very much like hammer, hence it is called a hammer. This resulted in the formation of bullish pattern and signifies that buyers are back in the market and the downtrend may end. Traders can enter long position if next day a bullish candle is formed and can place a stop loss at the low of the hammer. Now, for your better understanding, I shall be showing you slides for the same. So, what is the time frame defined for these candles? I told you this, the rules are the same, applicable whether you are an intraday, whether you are seeing a 15-minute chart pattern, whether you are seeing an hourly chart pattern, whether you are seeing daily, weekly, monthly. The rules and technical analysis, the rules of following the candles, the rules of following the indicators are the same. So suit yourself with your time frame, but application of rules will remain the same no matter what. I hope I'm clear, because this rule has to be set in your mind. You cannot see, okay, if you are an intraday trader, then if you are going wrong in your trade, then you say, okay, no, but the daily is still positive. That is where we always mess up. So you have to, I started this lecture by saying that you have to first decide, are you an intraday? Are you a positional? What is the risk appetite that you can take? And against that, what is the projected price that I'm going to get? I repeat, your discipline, whether you are a trader of an intraday this or a daily, first that has to be set. How much loss are you going to take? Because what would be the risk as per the definition that is likely to happen, and against that, what is the reward that I'm going to get? I hope this has to be the base for every trader for any time frame, whether it is for 15 minutes to monthly. So now let's get going again. So now how do you have a hammer trade setup? I hope now the picture of hammer is set in your mind. Now we will see how the strategy can be formed. The trader's entry depends on the risk appetite of the trader. If you are an aggressive trader or a risk taker, he can buy the stock the very same day. Remember, the real body's color in hammer does not matter. So yes, we showed you in the slide, the previous slide, that there were two hammers. One was green, one was red, but it did not matter because it is a sign of an indication that we are most likely heading for a reversal. Hence, there is no violation of rule number 1. If the trader is risk averse, he can buy the stock the day after the pattern has formed, only after ensuring that the day is a blue candle day. Risk takers can qualify the day as a hammer by checking the following conditions at 3:20. So I repeat for your better understanding, the stock and on that particular day makes a very deep low. However, during the latter part of the day, there is active participation coming from the bulls. That means the bears are losing their grip, the bulls are getting active, and they have drifted the stock price up and has closed near the high of the day, which does not have, more often than not, does not have the upper wick. That means the high and the closing are probably very close to each other. So open and close should be almost the same within 1 to 2% range. Lower shadow length should be at least twice the length of the real body. That gives you the definition of a hammer. And the picture also justifies of an image of a hammer. So these rules have to be set in your mind. I am requesting you, I see many people raising their hands. I am going to solve all your questions, but afterwards, please. The risk-averse traders who is the aggressive trader will try to take a trade on that very day. Once he evaluates the OHLC is the open, high, low, close data on the second. If it's a blue candle, the trade is valid so that he can go long. The low of the hammer acts as a stop loss for that particular day. Now I will be giving you chartical case study for you to understand and visualize. Keep these impressions in your mind so it will be very, very easy for understanding. Now, Now let us see, this is a chart of Ashok Leyland, and which is the recent past. I mean, we have just seen a fall some time back, and this is the data taken from that very recent period. So those who have been witnessing these falls, it will be very fresh in your mind. Have a look. There has been a continuous bear run in the prior rally, downward rally. Then it is followed by a hammer, which is shown in this square. Can you see the body is small and the size of the downer wick is double of the body, which gives a definition of hammer right. So if I was an aggressive trader, I would have seen this. I would have bought my trade during the close, keeping the stop loss at the low of the hammer. The lowest low on that very day would act as my stop loss and go with the stop overnight and see what happens next day. However, if you're not, you still want to have double clarification, you will wait for the next day. And as you see that the stock has opened gap up and higher. So what happens is basically sometimes when it is a sideways, it's not necessary that market can witness a V-shaped recovery, but sometimes it consolidates. But then what happens the next day, you see that the stock has already gone much higher. So but this is as per your risk appetite, as per your discipline, and what you are comfortable with. There's nothing right, there is nothing wrong. It is how much risk you are ready to take, whether you want to take the risk for the next day or you want to wait for a confirmation. That is totally up to you. But to minimize your stop loss, one can definitely get into the trade seeing the occurrence of a hammer. Now we will go to the case 2. As you can see, this is the stock AU Small Finance. This is also the data which we have just taken in, which we have seen in the recent past. All this fall we have seen right now, and July and August has been a good upward move. We have seen the bull rally. So right now, this is what has happened. You see, this stock right from 700 levels has corrected to 500 levels. You see the occurrence of hammer. Have a look. If I was an aggressive trader, I would make an entry near the close because that is when the hammer formation has taken place, and my stop loss would be below 530, which has been the low of that day. But yet, if I do not want to take that risk, I'm unsure of this, I will still wait for the next day and you see a bullish candle occurring, and then probably you can make an entry in your chart. Now, one more thing that I would like to bring to your notice is, right now we are studying only candlestick, and what is the candle, each and every candle, what is it trying to give a message to you. But nothing in isolation should be done, because in technical analysis, it's not necessary to know everything, but at least you have to have some supporting tool with it. Something in isolation, something singularly cannot be and should not be used to make your judgment. So we should also use some supporting tools, indicators. So it could be an RSI, it could be a stochastic, it could be a directional like PDI, MDI, any, or a moving average, whatever you feel comfortable with. So to make this study even more interesting, tomorrow we will be covering the same case studies with the introduction of stochastic, which is a momentum leading indicator. So this will also give you a better judgment from what you have learned today. And tomorrow it will be even more clear and even more precise as to why we are going into these trades. So today, let us just understand the candles, and we will make it as simple and as explanatory that when you are going to trade from the coming week, you will have a better understanding. You will be able to make your own judgment, not confused as to what the charts are saying. Now, this is the other example of Balrampur Chini. This also is the data from the recent past. A very, very obvious picture of a candle, which we have shown you in this square. Mind you, as I told you, at least 15 candles prior to that should show a downward movement. Here, of course, we have much more. And also, the stocks would have gone into the oversold zone, which we will learn tomorrow. Please do not get confused by oversold and overbought. We will learn that very clearly tomorrow. So today is all about candles. So right now we are seeing hammer formation over here in Balrampur Chini. See, the low made over here is at around 330. The bulls participated during the latter part of the day and dragged the price up towards 340.45, and the high made was around 355. So the close and the high are pretty close. The definition says that the size of the wick has to be at least double of the wick size, the body size, so which it is. So that qualifies for a hammer formation. And from there on, we see that the upward rally, the reversal of the downward move has taken place, and now we are going towards the upward move. We may call it a bounce back, or we may call it as a bull run. So too early to say whether it is a bull run, but we can say it is ready for a bounce back rally, showing signs of reversal from the preceding downward trend. Oh, English. Okay. Sorry. So I should be speaking in Hindi also, I'm told. Definitely. So just for people who have not understood my prior this, I will speak in Hindi also. तो hammer का मतलब क्या है? Now, this is just a repetition for those who only understand English. Now I am going to explain in Hindi. Hammer का मतलब क्या है? हैमर एक्चुअली एक बेरिश मूव जो पहले आया है और उसकी जो समाप्ति होने वाली है, अगर रिवर्स होने वाला है ट्रेंड वहां से, तो हैमर फॉर्मेशन से हमें ये पता चलता है दैट द बेयर रन इज गोइंग टू गेट ओवर. और कैसे हम बोल सकते हैं? स्टॉक ने उस दिन पे, अभी ये हम बात कर रहे हैं अवस फाइनेंशियर्स पे, उस दिन स्टॉक ने बहुत ही लो किया है अराउंड 1800 लेवल पे. पूरा दिन की शुरुआत होती है नीचे लो बना के, उसके बाद जब दिन की समाप्ति होने आने वाली है तब बुल्स मतलब बायर्स जो बाय करने वाले में इंटरेस्ट रखते हैं काफी तेजी से बाय करते हैं और ये स्टॉक को ऊपर लेके जाते हैं, हाई बनाते हैं और क्लोजिंग देते हैं टुवर्ड्स द हाई. तो मतलब क्या है? हैमर का डेफिनेशन क्या है? जो विक होता है उसकी साइज एटलीस्ट डबल होनी चाहिए बॉडी से और क्लोजिंग आता है हाई के नजदीक में. तो ये है हैमर का डेफिनेशन. तो ये फॉर्मेशन से हमें पता चलता है कि क्वाइट पॉसिबल ये स्टॉक बॉटमिंग आउट हो रहा है और अभी यहाँ से रिवर्सल पैटर्न की शुरुआत हो सकती है. तो और एक अभी हम एक हैमर का एक एग्जाम्पल देंगे. मैं हर एक टॉपिक पे आपको 4-5 एग्जाम्पल दूंगी, तो उससे आपको ये ख्याल रहेगा कि कैसे मूवमेंट उसके बाद आती है. ये है टेक महिंद्रा. To those who have been following our calls, we have been repeatedly giving calls on Tech Mahindra right from 980 to 1000 levels. And why were we doing so? Because we saw this stock falling. ये stock गिरा है 1300 से to a low of 930, 920 levels. अभी स्टॉक इतना गिरने के बाद हमने देखा कि प्रीवियस सब कैंडल्स बेरिश कैंडल्स थी, जहां पे बुल्स का कुछ पार्टिसिपेशन ही नहीं था. देयर वाज नो पार्टिसिपेशन फ्रॉम द बुल्स. There was no control coming from the bulls. It was only the bears that were controlling this stock. But the last candle, which is called the hammer, what did we see? Stock made a low. The buyers took part in it actively during the latter part of the day to lift the price up. So उसका मतलब क्या होता है? That bulls अब control में आए हैं और अभी यहाँ से reversal हो सकता है. So this is how the hammer formation is going to help us. So we conclude with hammer. Now we go to the second topic of bullish engulfing. Okay. Now engulfing का मतलब क्या है? जो engulf कर डालता है, जो एक छोटा बॉडी को बड़े बॉडी के साथ में पूरा क्लोज कर देता है, उसका मतलब है engulf. So bullish engulfing का मतलब क्या है? अभी हम सब सिर्फ बुलिश की बात करते हैं, तो उसका मतलब क्या है? बुलिश एनगल्फिंग मींस अगेन अ रिवर्सल पैटर्न. बुलिश मतलब अब स्टॉक ऊपर जाएगा. It will now go up. So that is what we mean by bullish engulfing. If this happens on top, then it is called reversal from the bull to the bear is called bearish engulfing. But from the bear to the bull is called a bullish engulfing. So जब stocks एक तरफ नीचे जाते हैं, and then we see a big body, whereby what does it mean? It is bigger. The low is also lower than the previous candle. The high is also higher than the previous candle. So this diagram, this two candle picture will give you an explanation of a bullish engulfing. This is going to be very, very interesting. And this is what we have seen right now today. If you all are actively participating, this is going to be our homework. Today in Bank Nifty, we have clearly seen a bearish engulfing. Right now, I'm talking to you about bullish engulfing, और उसका reverse है bearish engulfing. So repeat, bullish engulfing is the word bullish आया मतलब क्या? Reversal from the bearish view to the bullish view. That is what the bulls are going to be in control of the stock or the index or any commodity. The bullish engulfing pattern evolves over 2 days. So we are comparing it to a 2-day chart, the candlestick pattern. The suggested buy price is around the close price of the blue candle, that is on the P2. P2 मतलब दूसरी candle की बात करेंगे और P1 is the candle number 1. So risk taker initiates the trades on P2 itself after ensuring P2 is engulfing P1. So जो P1 is the previous candle, जिसको वो engulf करता है, that is P2. The risk averse initiates the trade on the next day, that is the day after P2 around the closing price, after confirming the day is forming a blue candle. If the day after P2 is a red candle day, the risk averse trader will ignore the trade owing to rule number 1 of candlestick, buy strength and sell weakness. So on a personal note, in multiple candlestick patterns, where the trade evolves over 2 or more days, it is worth to be a risk taker as opposed to a risk averse trader. The stop loss of the trade would be the lowest low between P1 and P2. And once the trade has been initiated, you will have to wait till the target has been hit or the stop loss has been breached. So of course, one can then trail the stop loss. We will talk about trailing and all much later. So here is an example. This is the stock. This also stock has been recommended by us very many times. Now have a look. This has happened sometime in June. You see a previous downward rally going on. So it is a downtrend. After that, we see that a small red body, red candle, which is still a bearish view. And then subsequently on, I think 13th of June, we see a big candle. So what happens? On the beginning of the day, it makes a new low. However, the bulls come in control and they make the stock come towards 550. So right from 500 levels to making a high of 550, and the real body is engulfing the previous candle. So this is what we mean. वो खा जाता है पूरा, वो candle को पूरा cover कर देता है. So that is what is called as engulfing. So bullish engulfing pattern, a very, very strong phenomenon of a reversal pattern. So this is what we mean by a bullish engulfing. So how would you execute the trade? You may buy this stock during the closing of the day with the stop loss as the lowest low. What did we say? The lowest low between P1 and P2, which is the P1 over here, the previous red candle. The next candle, which is the bullish engulfing, is the P2. So stop loss of the low of P2, one can get into the trade and then ride the rally. What do we mean by trailing the stop loss? So अगर हमने यहाँ पे entry मारा है, if we have made an entry at around 530 levels, we will keep a stop loss below 500. As you see a favorable trade, when you see a favorable trade, if you are running through the rally, say hypothetically you have reached the target of 590 and yet you want to hold the stock, you will keep the stop loss of perhaps 570. So whereby you do not minimize on your profit is also safeguarded, and you are becoming a smart trader. There are various ways of doing. You can either book partial profit, or you can hold through the trade by keeping your trailing stop losses. So this is what we mean by bullish engulfing. So I will be showing you a couple of more examples on bullish engulfing. Here is the stock of Star Health. Again, the period of June, July. Have a look, the previous fall, right from a continuous fall, right from 680 to 700 levels, which has, so how many candles? Did we say 15? Are we counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So see, this is what I mean, that at least a fall of 15 or at least a rise of 15 is eligible for a decent reversal pattern. So over here in example of Star Health, we are seeing that the stock has fallen right from 750 levels to a low of 460 levels. We are seeing that after the previous red candle, we are seeing a formation of a bullish candle, which is engulfing the P1. So P2 is a very, very strong candle. And over here, have a look. It does not have the lower wick. The stock, after making opening at the low and that being the lowest, we do not have a lower wick, but the stock goes right high up to cover the previous candle, and that is the P1 candle. And if I were an aggressive trader, I would make an entry towards the closing because it has moved past the previous high. I will still take the trade and keep the stop loss of the lowest low between these two candles. So assuming my stop loss is at around 400 and below 460, I would want to get into the trade. So this is what is going to happen, and see the fruits that one enjoys following the discipline and having a proper knowledge of candlestick. This is one more example of Metro Brands. Now have a look. Over here, it is not justifying a previous strong, this is another example, because what I told you that previous swing has to be a count of 15. In this case, the stock has only been consolidating. It has been moving in a narrow range. We do not see a very proper downward fall, but this is also a new stock actually. And we are seeing that it is coming out, it is making an effort to come out of consolidation. So this is a very, very different example of what we have done in the previous charts. So after a consolidation, we will take a chance. We will not be an aggressive trader because this is not giving a full conviction that yes, this bullish engulfing is calling for a reversal, but it is giving us a buying opportunity. So I may buy a small quantity, and then I may increase once the stock is ready to form a trend, and perhaps giving us a breakout of the previous high. So that will give us a confirmation that the stock is coming out of the consolidation. So this is a very, very different example. Not a very aggressive buy, but yet I will go in for a buy because the bullish engulfing is giving me a signal that yes, the stock is showing some buying interest. Now, this is another stock of Kotak Bank. This rule justifies why? Because the previous rally was a downward rally with a count of at least 15 downward movement. Then we see that after a small red body, the following day, that is P1, the P2 is making a bullish engulfing. It is making a new low. However, the bulls take full control and they cover the previous candle, and the big white body is strong and healthy enough to show that the buyers are in control, the buyers are in command, the bears are showing fatigue, exhaustion. वो लोग थक गए हैं और अभी time है bulls का, that bulls will take part in the buying, and the stock is now done with the selling strategy. अब buying का interest ये stock में बन रहा है. So from there on, you can see, look at the reversal. Today also, we just closed our Kotak Mahindra buy call, and just see how much rally it has given us after a decent corrective fall that we have witnessed in the recent past. Now, one more bullish engulfing is Adani Transmission. Adani stocks have been the favorite right now. They have given us super results. Now have a look. This too fell quite a bit down, deep down, after a red P1 candle, which is the red, followed by a bullish engulfing. This also has a very big wick on the lower side, but the body is bigger than the previous candle. So this qualifies for a bullish engulfing, and I will keep the stop loss of the low over there, and from there on see the rally that one is in. So imagine if you were a smart trader and made an entry at 1900 levels. Today we are in August, seeing something around 3500. So nearly how much? 60-70% of the stock we have gained. Yes. So that much of a return, if you are following discipline, if you are aware of how technical analysis is helping us in making a right judgment, making a right trading qualifying rules, and this is how we are going to get our returns. I hope English, Hindi, dono aap samajh rahe hai. I hope everything is very clear. Please do let me know if you do not understand. Where will we be able to see the hammer? Will it be published daily in any newspaper? After March 2020, we had seen bullish engulfing in many stocks. Yes, agreed. Right now, I'm giving you all the recent past data, so it is fresh in your mind. And for your homework also, you can come quickly to the past data. We are just talking about 1 or 2 months before what has happened. So that will be very fresh in your mind as to what has happened. Of course, as I told you, history repeats itself. Technical analysis is study on basis of past history. So you will find these occurrences every now and then. But right now we have been very fortunate. Right now we have got this class when we have just seen a previous bear run. From there, we have witnessed a good rally right from 15,200 to nearly 18,000. And now today's occurrence also is going to be quite dynamic. So we are at a very good level for you all to understand, because you will be today also seeing quite a few occurrences what we are going to study. So let's go slow, step by step. Do not go in the past of 2020. I'm giving you fresh occurrences, so it will be for easy reference also. So I repeat, now this is Adani Transmission. We have seen the bullish engulfing and see the rally that we have witnessed. Now we come with another formation. It's called a bullish harami. So bullish harami is multiple candlesticks. So far we have studied either one, that is hammer, or a comparison of two, that is bullish engulfing. And right now we are going to study 2 to 3. From here on, we will be studying 2 to 3 consecutive candles formation. So bullish harami, now just understand this theory properly, is multiple candlestick chart pattern which is formed after a downtrend indicating bullish reversal. It consists of 2 candlestick charts. The first candlestick being a tall bearish candle, and the second one is a small bullish candle, which should be in the range of the first candlestick. So the previous candle has been a big body, big in size, which has been a continuation of a bear run. I hope my cursor is visible to what I'm showing you. And the following subsequent candle is a small body which is within the previous candle. So this is what we mean is called the bullish harami. Means till the previous candle, there was no bull coming in. There was no strength of the bullish view. But as soon as the second, even if it is a small candle, we are seeing that the bulls have started participating, but the bears have lost interest in further selling. So the first bearish candle shows the continuation of the bear trend, and the second candle shows that the bulls are back in the market. So traders can take a long position after the completion of this candlestick pattern. Now let us see how it looks on actual charts. So it will be easy. First, we have understood. So far we have seen is hammer, where we see a small body on top, but a long wick, which is actually double the size of the body. Second we did was engulfing. Engulfing is where the big body which engulfs the previous body. So that is bullish engulfing. And now we come to bullish harami. Bullish harami is again a trading reversal. We are talking about a bullish setup. That means from bear to bull. So the previous run has been a bearish run. From there on, after a strong big body, a small bullish candle has occurred, which is within the size of the big bearish candle. So that is what we call as bullish harami. So the idea is to go long on the bullish harami formation. Risk takers can initiate a long trade around the close of the P2 candle. They can validate the following conditions to confirm if P1 and P2 together form a bullish harami pattern. The opening on P2 should be higher than the close of the P1. This is rule number 1. The current market price at 3:20 p.m. on P2 should be less than the P1's opening price. If both these conditions are satisfied, one can conclude that both P1 and P2 form a bullish harami pattern. I repeat, the current market price, we have two candles. The first body is the big red body. The second one, P2. The current market price. We take part in this trade only at the latter part of the day. The current price should be less than the P1's opening price. And if both these are satisfied, one can conclude that both P1 and P2 form a bullish harami pattern. The risk averse can initiate a long trade at the close of the day after P2, only after confirming that the day is forming a blue candle. The lowest low of the pattern will be the stop loss. Like all cases, we will be following the stop loss of lowest low. Here is an example of Tata Consultancy. So we have seen stock have been falling. So our previous fall was, of course, led by the IT stocks. So Tata Consultancy, also TCS. We saw the 3650, that level, and we saw that the stock was falling. And after that, we saw that a small bullish candle has taken place, which is called the bullish harami. And from there, we saw some reversal coming in. So the stop loss was very marginal. The lowest low, that is the P1. So this was a favorable trade following the rule of bullish harami. Then we have the example of RCF, Rashtriya Chemical Fertilizers. We have seen the previous fall, the bearish movement. Then we see occurrence of a small bullish candle. The previous one is a big red body with two wicks on the higher and the lower side. Then our occurrence of a bullish candle, which is well within the previous, the P1. And from there on, we would take the stop loss of the lowest low and go through the buying strategy and run the rally. We have another bullish harami in Poonawalla. This is also one of the favorite stocks which people often want to trade in, because this has given us very clear buying opportunities time and again. So here again, we see that the previous bear run, subsequent after the previous big red candle, we see a small bullish candle occurring. And for satisfying the rules, we are seeing that we would get into the trade with the stop loss of the lowest low of the previous candle. So this is how we are going to understand the candles and at the valid points. This is another very, very interesting stock, Polyplex Corporation. We saw the previous falling bear run. We saw a big red candle followed by a small bullish candle, which is also called a doji, and which is now supported by the buying strategy under the formation of bullish harami, keeping the stop loss of the P1, the lowest low, and go through the bounce back rally. So these are the stocks, the formations which are going to give you an idea as to why we have generated a buy strategy for the same. Now here comes another stock is Piramal Enterprise. Very, very interesting and a very clear example. See the previous bear run right from 2400 levels to the low of 1500 levels. After we see that the stock has made a big red candle. Remember the rules are the previous body is a big bearish candle followed by a small tiny bullish candle which is well within the range of the first candle, so previous candle, and that qualifies for a bullish harami. So that is how we would get into the trade, because this gives us a message that the stock is showing signs of bottoming out. Now we come to another formation which is called morning star. It is a study of 3 candles in a row. So morning star, again the word very morning means what? A ray of hope. It is giving us hope. And what is the hope for? From bearish to bullish. So that is why we say it is a morning star. The reverse of this is called the evening star. What is evening star? Darkness. So from bullish to bearish, we are going to get into bearish mood. So that is called the evening star. So now let us study the morning star, because this will be a part of all these bullish ideas. So the morning star is a multiple candle chart pattern which is formed after a downtrend indicating a bullish reversal. It is made of 3 candles. The first being, now we will have P1, P2 and P3. So P1 is a red body, red big body, which is giving us an idea that it is been a bearish day. Then comes the second candle. So the second candle, it can be a doji, it can be a spinning top, it can be just a body with a small wick and a small body. And the third one opens with a gap up. Gap up means higher than the previous day's close, and it makes a high maybe equivalent to the P1 or more than the P1. So this is called a morning star. So these are the definitions for a morning star. It is made of 3 candles. The first being a bearish candle, that is the red one which we are showing. The second one can be a doji, and the third one is a bullish candle, which is shown in our diagram of a green candle. The first candle shows the continuation of the downtrend. This is the red one which I'm talking about. The second candle is a doji. What do you mean by a doji? Doji is a candle where there is a equal participation. It is like a tug of war between the bulls and the bears. मतलब bulls भी इतने participate कर रहे हैं, bears भी इतने participate कर रहे हैं. दोनों का equal participation है. So there is a confusion कि ये चार्ट क्या है, ये कैंडल क्या है, bullish है या bearish है. जब दोनों का equal है participation और body छोटा है, that is called a doji. So doji is always a pause, a confusion के दोनों का पार्टिसिपेशन. बट यहाँ पे जब हमने देखा है कि कंटिन्यूअस बेयर मूवमेंट हुई है और यहाँ पे बुल्स भी, बायर्स भी अभी एक्टिव होने लगे हैं, so that is one small idea, but that does not confirm that yes, it is an idea, but it definitely tells you that yes, say only bears are not participating. Now the bulls also have started participating. So that is the first hint. Second day, when you come back to see what the formation is, you are seeing that the stock has opened higher than the previous high, and it is sustaining and going through the higher high, probably equal to the P1 candle, the bearish candle. So this occurrence is called a morning star. So the second candle should be completely out of the real bodies of the first and the third. मतलब ये तीन like a triangle बना है. So it's like a triangle. So that is what it means by a morning star. Initiate a long trade. How will you set up a strategy? Initiate a long trade at the close of P3 around 3:20 p.m. after ensuring that P1, P2, P3 together form a morning star. To validate, so far we have studied the comparison between 2 candles. Morning star is a comparison between 3 days. So to validate the formation of the morning star on P3, the following conditions should satisfy. What are the three conditions? The P1, the first candle that you're observing is a red candle, a continuation of the bearish move. With the gap down opening, sec P2, मतलब ट्राइंगल, नीचे नया लो बना और फिर बुल्स ने भी पार्टिसिपेट किया तो डोजी बना है या स्पिनिंग टॉप बना है. P3 मतलब तीसरा दिन, third day. What happens? Opening should be a gap up. It should go higher than the doji. And plus the current market price at 320 should be higher than the opening of P1. So it has to cross the P1, which I showed you. So the closing should be higher or at least equivalent. Yeah. So the lowest low in the pattern would act as a stop loss. Of course, the middle candle जो triangle बना रहा है, उसका low is the stop loss. So this is an example of blue dart. Again, a recent data. Have a look. The previous rally has been a downward rally. We see a big red candle followed by a new low, but a doji has been made. And then we see a gap up opening and stock at least going higher and than the P1. So this is what we mean by the occurrence of morning star, and it gives you the confirmed view that the stock has bottomed out, the bears are tired, and the bulls are actively participating. Bulls are actively participating मतलब buyers are much stronger than the bears. जो बेचने वाले हैं, people who are selling have stopped selling. They don't have much to sell now. Now it is more of buying interest seen in this particular stock. So this is a very, very good example. Do have a look at this chart for your reference. Second one, what we are studying is right now Gujarat Pipavav. Now have a look. This also has shown us a previous continuous downward journey. Then we see a big red candle. This is P1 followed by a doji. See, there is very hardly any body where the opening and the close is pretty much same. And the highs and lows are the two wicks which show. And then it is followed by a little bit of a gap up and the stock going higher than the previous this. So this is the occurrence of morning star in Gujarat Pipava. And we are getting an indication that yes, the stock is bottomed out and we are ready to buy this stock. Here comes another stock is Gujarat Ambuja. Now this is very complicated. It is not giving you a very, very clear picture, but yes, all the same. See, a small body whereby you anyways know that yes, the bears are showing exhaustion. Then we see that there is an occurrence of a doji again, followed by a bullish candle. So these three candles over here, what I'm showing you, the continuation of the bear run, the previous one, the P1 is the red candle, followed by a doji, and the third one is a bullish candle. From there on, you can see that the stock is showing signs of reversal. The stop loss will be the lowest low of the doji. That will be around 160 levels. So this is how we will be making our trading strategy using the reason, the occurrence of morning star. Now, this is another stock which we are seeing right now. We are witnessing a very good, strong bull run in Gujarat Alkali. But had you been aware of these positions, never mind, market is a continuous process. So once you get familiar with these formations, it will be really fun for you all to get into the trade because it's with a lot of understanding and there won't be any anxiety because your stop losses are fixed, your targets are fixed. Setting targets and all will come much later. This is an introduction to Candlestick. Candlestick does not tell you the target. Candlestick does not tell you the trade formation as to how much. Along with that, we will need to take the support of either a moving average, either Fibonacci, or the other indicators, which tomorrow we are going to do with stochastic. So right now it is just singularly Candlestick. So be thorough with these candles, that because these are all common occurrences at prominent falls and prominent rises. So this will help you as to when to execute your buying strategy, when to execute to book your profit, or if you are an aggressive trader, you would want to go short sell when you are a future trader. You can also make your call and put strategy, because where you are at the bottoming, you can either buy a call, or if you are buying, you can hedge it by selling your call at the previous high. So this is how you can make various strategies, but we will come to it gradually. Right now, it is only focus. Once you are thorough with the candlestick formation and the understanding, you will come to a level whereby the charts are talking to you. You will feel that the chart is trying to give you the message. But for this, my earnest request is that every day you may just follow 5 to 6 stocks, and of course the main index, that is Nifty and Bank Nifty. For your better understanding, you will get the grip of each and every day candle, and that will give you a better knowledge as to what it implies. So in this Gujarat Alkali, you are seeing that the downward trend has taken place. We see that the red candle has occurred. Below that is a spinning top. It is not a doji, it is a spinning top. And then followed by a bullish candle. So these three candle occurrence gives you the view that yes, it is a sign of reversal, time to go long. Now this is another stock. Now this is a very different stock. There are two ways of looking at it. To those who are familiar with cup and handle formation, now I will explain to you just in a nutshell to those who are not aware. Now this is not a completion. This is not absolutely reversal of a downtrend, because we have already seen the reversal taken place earlier. Now the stock is getting into the upward move, but yet I will go a little small quantity. Now, what is the other thing what we have seen besides the morning star? Let me come back to this. First is just one red candle followed by a doji, and then the third occurrence is a bullish candle. But to support this view, there is also another. Either you can say that the stock is making higher bottom. Higher bottom means the previous bottom was lower at around 200 and 2300 levels, and over here the other bottom made it as 2500 levels. That is one way of looking at it. If you are familiar with different formations, this is the cup and handle. Have a look. This round shape is the cup. The retracement is less than half the previous rally, and it is also a handle. So once a breakout of cup and handle takes place, you know that the stock is going to go all out to show you higher levels. So this is another beautiful formation besides the morning star, also the cup and handle. I repeat, cup and handle. To those who are not at all familiar, please don't hassle yourself, because there will be many chances to understand all this. But to those who are also viewing, it is either a higher bottom. In our technical language, we always say, when does a stock get into a trend? When it continues to make higher bottom and higher highs. So in this case, it is a higher bottom. Second observation is, it is a cup and handle. Have a look. It is like a bowl, which is a cup. Then there is a little bit of a retracement, little bit of correction to make a handle of the cup. And once you see a decisive breakout of this cup and handle resistance, you know that the stock has moved multifold. So this is what we mean. There were various ways of getting into this trade. So right now, since we are focusing, it is a morning star, but I will not go, if I were to look only at morning star, I will not go all aggressive, because it is already gone into the reversal. The previous fall has given us a reversal pattern already. So it is not very convincing, but for you to understand, I had to show you all the different types of combinations, because sometimes these strategies can go wrong, and we shall be learning in the next webinar. Whenever we have, we will show you as to how trades can fail. But right now, for just better understanding, we are seeing clear charts whereby you are seeing this. And for you as beginners, it is very important to see that what is the past data. Has it been a very distinctive fall? Has it been a very, very prominent rise? Only after that, if that occurrence is happening at the right time, you will get into the trade with the knowledge of only candlestick. Now comes three white soldiers. Again, a study of three candles. So the very word, the three white soldiers, is a positive word, which means after the end of the bearish run, when we see three consecutive big strong candles, which are in the bullish favor, and they are not overlapping. What I mean is they are prominent big candles. They cannot have small candles, small body. The body has to be very big. So, and the wicks have to be very small. That means it is a very, very robust upward move. So the three white soldiers is a multiple candlestick pattern that is formed after a downtrend indicating a bullish reversal. These candle charts are made of three long bullish bodies which do not have long shadows or wicks. As I told you, the bodies have to be big and robust. And they are open, the long bodies which do not have long shadows and are open within the real body of the previous candle. Means they open within, they don't go with a gap up and all, they open within. And then they subsequently go to make a higher high. Same way, even in the third candle, the opening has to be within the previous candle and they make a new high. Thus, three conditions: big fat body, the opening should be within the previous candle, and the third condition is that it has to make a new high as compared to the previous candle. So these are a very strong messages that the stock is ready for a very, very strong upward move. So three white soldiers candlestick pattern suggests a strong change in market sentiment in terms of the stock, commodity, or pair making up the price action on the chart. When a candle is closing with small or no shadow, it suggests that the bulls have managed to keep the price at the top of the range of the session. So this is a very, very strong bullish occurrence, and you can go all out to increase your position, to go strong on your stocks. Now we shall study the examples. First, we understand the conditions. The first candle seems like a continuation of the downtrend. It is a bullish candle, meaning the closing price should be more than the opening price and indicates that the bulls are back in the action. The second one should also be bullish. The opening price should be within the real body of the first candlestick, most preferably between the midpoint and the closing, means above the midpoint. The closing price should be about to make a new high. The third condition is that the third candle should also be a bullish candle, having no or a small shadow. The body has to be strong. The opening price should be within the real body of the second candlestick, most preferably between the mid, sorry, and the closing price of the second candlestick. So the closing price should be above the previous candle's closing price and should be higher than the previous candle's closing price. So these three conditions. So this theory is one part, but your eye appeal has to fit in. So that is why we are showing you many images so that it is fixed in your impression and you know what you are looking for. So first is a bull candle. It has to have small wicks or a small shadow. The body has to be big, means the bulls are in total control. The second one is the second candle opens well within the first previous body, but preferably above the midpoint and the high. The third one is also opening strong well within the previous candle and making a new high. So these are the conditions for a three white soldier setup. Sorry. Now this is the example of Axis Bank. This is what we have witnessed just in July after the fall. We are seeing that the previous bearish candle, that is the red candle, that was the last candle which took place for the bearish move. Then we saw this can also be called nearly a bullish engulfing to what we studied. That was the first occurrence. The second one, which is opened within the first body above the midpoint of the previous candle and made a new high. The third one also, and see the wicks are so small. So that means the bulls are in total control. The third one also well within above the midpoint of the previous candle, makes a new high, and just see how the stock has moved one way. So this is what we mean, that the three white soldiers, when you see, and it has to preferably happen at the beginning of the reversal. If it happens halfway through the rally, it may not show so much of a continuation of a trend, but this is definitely a yes, yes, yes to get into a buying strategy because it indicates a very, very strong upward move. This is another one. What we are seeing is ITC. ITC, which has been a laggard all this while. Once you see the three white soldiers taking place, just see the rally right from 250 levels to straight away to 315 to 320 levels. So ITC is, we are seeing that this stock has been only consolidating. We did not see a previous fall, but it was consolidating. So this is a different occurrence. But the minute you see the occurrence of three white soldiers, I told you it is a very, very strong indication that the stock is ready for a takeoff. So takeoff, I mean, to a very, very high level. So imagine the return that it has shown us right from 260, 70 levels. If you were to take part about 270, then also to around 315. So this is what the study of Candlestick is going to help you to enjoy, reap the benefits after doing a lot of studies on a regular basis. This one is JB Chemicals. If you remember, we had come with a chemical thematic report. Many such. There is some disturbance. 1 minute. Are we good? Okay. So now this is the study of JB Chemicals. Have a look. After the previous bearish run, we are seeing the occurrence of three white bodies and just see the move that we have seen. So similar such patterns were also seen in our thematic report of chemical studies. And those were Tata Chemicals, UPL, then also alkyl amine. We had given all those stocks, and this is how we have helped you to get good returns with the study of technical analysis. So please stay focused and let it be a disciplined continuation study from all of you. I really expect that those who have participated today, I hope you all benefit from this, and I hope you will continue and we will keep in touch after we can complete this session also. Now we come after this. This is another example of JSW Steel. If you remember, we have been giving a lot of metal counters. Now, JSW Steel, one of the most popular metal stock. You see the previous rally down. This is a different occurrence again. After a big fall, the stock has taken a very long time. It has been only in a consolidation phase. Now, the previous occurrence also, would you call this sometime before June? This is not a three white soldier. Why so? Why would you say so? Because the third candle, what you are seeing is like a hammer, is not a big fat body. Though we have seen three big candles, but the third candle does not fit the criteria of three white soldiers. However, subsequently, after a lot of consolidation, we see three white soldiers and then see how clearly the stock, without any complications, without any whipsaws, has taken a one-way upward move. So this is how white soldiers has helped us to make a decision to go long. There is one more example of Hinduja Global. This also is the data from the previous, just last month. So if you see, after a good corrective move, the stock has shown you a hammer, which was also one indicator that yes, it is bottoming out. Then subsequently, we saw bullish candles, and then very soon. So this is still a favorable trade. But if these occurrences, if you are going to take these stocks, I would not say emphatically that yes, it is yet to show. Yes, it did show you because this occurrence took place in the middle of the rally. But such occurrences at the beginning of the reversal is very, very positive and very, very favorable for taking a positive buy trade. Now comes bullish piercing. So bullish piercing is what? We are seeing the previous bear run, that is downward, making lower lows. And then once when the stock makes low, the next day, it still continues. It opens to make a new low. However, the bears show exhaustion after making the low. And one way the bulls start taking interest right from the low made of that day, and it covers up, it retraces it, it pulls back, it gives you a buy. The buying is with so much of force that it closes towards more than half the size of the previous red body. So have a look. Just for easy explanation, what are we saying is this: the previous bear run took place. The next day we come and we see that the stock has opened to make a new low. But then what does the green candle say? That the low was towards the beginning of the day. And after that, the buyers have shown so much of interest that it goes right all the way up, more than half the size of previous candle. So this is what we mean by bullish piercing candle. So just for theory, I shall read out. Two candles form it. The first candle being the bearish candle, which indicates the continuation of the downtrend. The second candle is the bullish candle, which opens the gap down but closes more than 50% of the real body of the previous candle, which shows that the bulls are back in the market and the bullish reversal is going to take place. Traders can enter a long position if the next day a bullish candle is formed and can place a stop loss at the low of the second handle. So this is what we are going to show you as the trade setup. Of course, the low has to be made as the stop loss. So the bullish piercing candle, the candle which is called the bullish candle piercing candle, is going to make a new low. So that low is going to be taken as the stop loss. And from there on, we shall be taking the buy trade, because the previous fall was a substantial one, and the bullish piercing candle, it is giving us a hint that yes, the bulls are in total control, time to buy the stock. So this is what we mean by bullish piercing. This is another example of Ultratech Cement, previous downward rally. Now we see that the stock has made a new low, but it is closing at more than 50% of the previous candle. So this is what we call as a reversal bullish piercing candle. The third one is Shriram Transport. Again, the previous fall, this has taken place sometime in March, and we see that the stock makes new low, but closes at about the 50% level of the previous candle. So this is what we mean by bullish piercing candle. Now, this is another example, Shri Cement, whereby there has been a very big fall right from 26,000 to a low of 17,500 levels. After making the new low, it has breached towards more than half the previous of candle. Hence, we call it a bullish piercing candle, and see how the reversal has shown us successful buying strategy. Another one now to see again, ITC. So here we are. We also studied the three white soldiers. Now we are talking about bullish piercing. Same rule, and see how it has given us a prior hint to get into the trade as compared to the three white soldiers. So now let us first study. Today we have done all about the bullish candles. Tomorrow we will waste no time and we shall start with our bearish candles along with the introduction of stochastic. So because, or if you have the time, if we are still ready to go on for another, have time, right? Or we do? No, then I suggest we start the topic tomorrow itself, right? For bearish, because right now we have completed the bullish occurrences, the bullish candle formations. Tomorrow we will start immediately. Hopefully we will have no disturbance as far as the password and all that is concerned. We will start sharp at 10 o'clock and we will go on with the question answers, also the introduction of stochastic, and we will quickly have a brush up of all the bullish candles also. Please bring in enough time. And today, right now, let's start questions. If whoever has any doubts, I'm open to answering your questions.
You can paste few of the examples from their side.
Yes. What are the questions? I don't know where I missed, but my question is, where will be able to see these candles? Oh, these candles, that is why I have given you examples. You will have to spot this. So when you are seeing your charts on a day-to-day basis, but yes, if you want to study candlesticks in details, I suggest read the book by Steve Nisson. Also, each and every candle explanation in a brief note. Go through the site of Investopedia, go through Wikipedia and read these books. Right now, today, since we have covered up only candlestick, please do your homework. After this webinar is over for these 2 days that we are going to cover, we shall be giving you this recording. It has taken place. This slide also will be given to you for your reference. So you will get, but the idea is that when you are asking me as to where we will find, this is what you will find when you are going to study your charts. When you study and when you come across these formations, this is how it is going to help you.
Trading view बता.
Trading view also will give you these examples whenever these occurrences take place. Now, hammers can happen in the bear market and in the bull market. In the bear market, you buy, and when you see this in the bull market, you sell. Is this understood? Yes, exactly. So right now, since we are covering the bullish signals, that is why I showed you the hammer at the bottom of the fall. Tomorrow, when we will be doing the bearish candles, I will be showing you how at the end of the bull run do we come across these candles or dojis or all these things. So yes, these rules are the same. So like how I told you, just how we have the bullish engulfing, we will also have the bearish engulfing. Just how we have the hammer, we will also have inverted hammers also. So these are all the examples. Just how we have the morning star, we will have the evening star. Just how we have the bullish piercing, we will also have the bearish piercing. So for your homework, there are 3 stocks today after the stocks that we have seen. Bank Nifty. Bank Nifty has shown a bearish engulfing. Bank Nifty, go through the chart on a daily chart, you will see that bearish engulfing. What I will again brush up your knowledge. Bearish engulfing is what? Engulfing the previous candle. So you will see today's bearish engulfing formation on Bank Nifty. In the chart Dabur, you will see a bearish piercing candle, which was a third candle chart which we spoke about. TVS Motors. TVS Motors has got an evening star. So have a look at those charts. And well, this will be a trading strategy what we will be setting up. Today, even after in the evening, I will go through some charts. I will see some examples and you can get into those trades. After this study, go into these trades. So at least you can make some money on what we have studied. So these 3 stocks which we are saying, one can go short sell on Bank Nifty, one can go short sell on Dabur, and one can go short sell on TVS Motors on basis of our studies. Dabur is bearish piercing, Bank Nifty is bearish engulfing, and TVS Motors is evening star. So these 3 charts are there for your reference. And tomorrow, let us quickly go through the reversal patterns. Today we studied everything. The rules were the same, but it is just that what we have seen at the bottom today of a downward journey. Tomorrow I will be showing you these formations at the peak, when the stock or the index is peaking out, and how it is going to call for a reversal. So that is what I will be teaching you tomorrow, and with the support of an indicator, momentum indicator, stochastic. So you will be at least qualified, or will have the grip of your trading strategy using at least these two formations. As we progress, let me get the review, let me get the feedback as to how you all have benefited. I will always be there to help you out in future also, and we can take this forward as and when the opportunity arises. We will be going in detailed study. This is, I believe that My participants today are new to technical analysis, so I have started with introduction to Candlestick. I hope this has made sense today, and please feel free to ask me. I'm still there to answer all your questions. Do we have any more questions? What time frame required for this? Like I told you, well, so if you are a beginner, I would say go for an hourly setup, because that is where you will have small stop losses also, and you will have small profit levels also. So start trading, because 15 minutes and all intraday will be too dynamic. So go on 75 minutes. I would prefer, rather than hourly, I will say go on a 75-minute chart. So that is an equal distribution of time for that particular day. So once you see these occurrences, start doing. If you are new, start doing on a 75-minute chart, whereby you will not witness so much of volatility. You will be able to enjoy your trade and finish the trade in 3-4 days to maximum 6-8 days. So that is how you will be doing here. What is a spinning top exactly? We will explain to you. Spinning top is when the body is small and the wicks are big on both sides. It is a little better than doji. I have a job working 9 to 5. When should I trade? Okay, so what you can do is follow the EOD charts. At the end of the day, you follow the charts. And once you have done your homework, then I don't suggest you can be an intraday or a 75-minute period chart holder. You should go for positional trades and refer the daily charts. So that way you can do your homework in the evening, once when you are free, and get into the set your buy trades, because when you are getting into your trade, your strategy has to be intact. Your stop loss is decided, your target is decided. So you can just give the trade and give your rules that if it falls to this level, my stop loss is it, or wait for your targets and feed in your targets also. PPT will definitely be shared. Is it that we may initiate the buy on seeing the bullishness of the candles on the same day by 325, or wait for the next day? So as per your risk appetite, if you are an aggressive trader, you can do it at 325, because I want to be very quick. I want to take advantage of getting into the stock at a lower level as compared to the confirmation on the next day when it opens high, if it has to open high. So, and my risk reward ratio would turn out to be more favorable, but you have to suit yourself. So I would say do some paper trading. If you are new beginners, do some paper trading, because market will give you ample of chances. So do some paper trading on basis of this study. And once you think you have started understanding, you're getting the grip of this, you can get into actual trading. On which time frame will prefer this candlestick for intraday? Well, which intraday 15 minutes. You can do even 30 minutes. Is there any software to identify these bullish patterns? Investing.com or trading.com. Yeah.
TradingView.com.
Tradingview.com. Yes. Any practicals, please, on Monday? Any practicals? Like I'm giving you the homework right now. See, on today, the way market has closed, and now that since we have the WhatsApp group active, let us see how Monday starts, and of course, we will share. I will not be stringent in giving my views. My aim is to help you all benefit with whatever knowledge I have and I can impart. So please feel free anytime. I'm there to answer your questions. To become a good intraday trader hands-on is 75 minutes. 75 minutes won't give you intraday opportunities. 15 minutes to 30 minutes will be intraday. Intraday, I mean, I'll make it clear, you will close all your positions at the end of the day. You will not take any positions the next day. So that is the meaning of intraday. So for that, I would suggest 15 minutes to 30 minutes. How do we decide on the target for your stock? So I told you candlestick is not going to help you to set your targets. There will be many other things. This is just, dear friends, please understand, this is the ABC of reading a chart. So from ABC, have patience. You have to get into word formation, then sentence reading. So that is what is going to help you to show your targets and all. So right now, let's be focused on, let's go step by step. Let's study our ABC first very well in our chartical studies, and then we shall progress gradually. And since tomorrow I'm also going to teach you the indicator, this will also help you to set your targets. Hindustan Unilever also bearish engulfing. Is it good? We'll see tomorrow. We'll see and I'll get back to you. Can candles be used for long-term investors? Yes, of course. I told you the rules are the same, whether you are seeing a 15-minute chart to a weekly chart to a monthly chart. What is the time frame suggested for the call options? That is depending on what call options also you want to do, because see, when you are buying calls and all, there is also going to be the worry of time erosion and all that. So for selling call options and all, well, you got to suit yourself. That comes much later. Right now, let's only talk about candlesticks and all. How can we select the scripts? By constant going through it every day. That is the homework. How do we also select the scripts? We don't get the list ready made. After the day gets over, we go through the charts, we go through all the banks that we follow. So maybe if you are a future trader, then the nifty future stocks, or if you're a mid-cap trader, you know, some stocks that you cannot jump from stock to stock. But yes, you have to do this homework of going through at least 25 to 50 stocks to get some good valid trades. So that homework has to be done from your end. Or else you do get alerts also from these trading views and all on breakouts or on crossovers, moving average crossovers or bottoming out. You do get those alerts, but that is ready-made and shortcut. That doesn't really help. First, if you want to learn systematically, I strongly suggest please do your homework every evening. After so many years, we all have to do this. And yet we can go wrong. We do go wrong because it's market ultimately. But at least we feel satisfied that yes, on basis of a study, if it doesn't support, yes, of course, you can go wrong on that. And most of the times you do go wrong. But homework needs to be done. So we have a group formed of PL technical analysis. Please feel free to put your this, and the link for tomorrow is posted on that. Yes. So I will see you all sharp at 10 o'clock and maybe 15 minutes prior also, so we can just brush up through that. And believe me, this will become very, very interesting and it will help you if you want to take this seriously. So shall we conclude here? I think so. So let's conclude. It's 6 o'clock. It's been a long day. Tomorrow we come fresh. Please try to remember what we have studied today. Tomorrow it will be a brush up and we will be doing many more things. Yes. Thank you all and I shall see you all tomorrow. Bye-bye.